Hi, and welcome to the Trading with Ashley show. I have something really special to tell all of you, and then this video is going to further reinforce it. You came here because more than likely you are interested in selling options for income and you want to learn the wheel strategy. And so I actually have a free webinar this upcoming Tuesday. It's going to be at 7 p.m. Eastern Time Zone. It's completely free to join. This is my gift to the YouTube community because you have been so supportive of me, and now I am well over 25,000 subscribers, and I am so excited about that. That's such a big milestone for a YouTuber, and I have you to thank. So I'm celebrating with all of you, and I'm going to teach those of you that are interested how to do this for a living. So if you want to join, I'm putting the link. It's going to be the first link in the description. There is limited space, so make sure you go ahead and secure your spot. And I am so ready to teach all of you personally and to get to know you personally. Very excited about that. But today's video is really cool because we are going to be working with a stock that has a smaller price point. This is Sofi, and a lot of you know that I'm a big fan of Sofi. Sofi is a stock that I have had in my portfolio for quite some time, and honestly, it traded sideways and consolidated for such a long time. But then, just when the situation was right for Sofi, with everything we have going on with the smaller cap type companies, the support that we are seeing with this new administration, then it just took off like a rocket. And so I've done a few videos on Sofi. Some people were caught in covered call trades and they needed to know how to fix the trade. And that one I will leave at the end of this video in case you find yourself in that situation. But what today is all about, I am going to show you some live trading that I did. So I started this yesterday so that I would be able to show you how a stock movement actually affects the option that you sold. So what happened yesterday was it was a down day and I sold some puts on Sofi. I went ahead and sold a covered call as well so you could see how it works. And then fast forward to today, and I wanted us to go look at an update on them and see how they're performing. So I think this will be helpful for you, and also those of you that aren't working with a lot of money. The put that I sold only required $1,500 in cash in my broker to be able to make the trade. So this might be of help to those of you that have smaller portfolios and you're just trying to get going. By the way, if you have a smaller portfolio and you're just wanting to jump into the action without having to join my larger Discord, I want you to consider my new Trader Network. It's a growing community. It's a much smaller price point, and I offer trades to them as well in the community. They get at least a trade a week. Well, today we were celebrating because we have been doing this for 3 weeks, and right now we are 3 for 3 with profitable trades. And nothing can help a new trader more than actually seeing their portfolio start to grow. And even by little bits over and over again, we call stacking. We're stacking the money that we're making, and eventually those wins over and over again become big wins, and you have a larger portfolio to work with. So that's the new Trader Network, and that link is going to be in the description as well. Let's get into the content for today. Let's go take a look at our technicals on Sofi so we have a clearer picture of what we're dealing with. So what you're looking at right here is Sofi is having a little bit of a down day, which is a bad thing. This is what you want to do when you're selling puts. But what I'm looking at down here, now I am looking at the 1 month chart. You can also look at the 6-month chart. The further out you go in looking at your charts, the more accurate the information is. You just don't want to go out too far because then you just have too much data to consider. But 1 month or 6 month is fine to consider your charts. Now let's look right here. You see the RSI is over 50. We're at 64. What this means is that this stock is in a bullish state. It is pushing forward. It is pushing ahead. Anything over 50, that means that there's got good volume and good strong buys going on, which is good. If you want to sell a put on a stock like Sofi, and it is over 50 on the RSI, then you need to understand where is a level of support. Well, when you zoom in to this chart, you can see right here, it's approaching the middle of the band. And the middle of the band is the 20-period moving average. So this is representing 20 days of price action. And it serves as a really good line of support. You can see where it's touched the 20-day moving average a couple of times, and then it pulls back up. And so what you can look at is trying to sell a put right here, either at or below the 20-day moving average, and there's a good chance that it will bounce off of this and then head back up to the top of the band, or at least trade sideways. And so this gives you a little bit of a margin of safety when you use these bands to literally kind of catch the stock and allow it to bounce back up. And so if we go sell a put underneath this band right here, we could do weekly, monthly, we could go even further out, but there's a good chance it's going to catch it, push back up, and then you'll keep all the premium that you have put up to purchase the stock at $15. Now, if you're actually put the shares, let's say that you are put these shares at 15, well, that's not bad either, because it's still in a bullish mode, which means it will more than likely eventually work its way back up to the top of the band. And then if you bought at 15 and let's say you sell it at 17 or 17.50, well, then you're making additional money in the wheel strategy for more than just the premium. You're making money as the stock rides back up. And honestly, that's where you make the most amount of money, when you're put the shares at a reasonable, fair price, and then the stock recovers and it pulls you up with it. And you get to keep all that price appreciation in addition to all the premium you're receiving. Now let's go actually sell some puts. Now that we know our level of support, let's go on the option chain and actually place this trade. So we want to go further out. We're going to do 2 trades just so you can see the difference. This expires tomorrow, 12/13. So we're going to go a little bit further out. We're going to go to 12/20, which I like 12/20 because it's that third Friday of the month. Let's go down here to the 15 to get a better sense for it. So this is a really good risk-reward dynamic, and our deltas are looking good because they're at 0.24. So you can go more aggressive if you actually want to try to ensure that you get the stock. You can actually go higher on your deltas. But for this right here, I'm going to go ahead and choose this 15, and here's how you do it. You press sell. This is on that Tradier brokerage, and I send it to a ticket. And it's an option. This is sell to open. It's a put. I choose 1 that represents 100 shares that I'm agreeing to buy. And this bid-ask spread is really tight. It's 0.24 and 0.25. So I'm comfortable with a market order at that situation. So let's do preview. Now here's what's going on. This is only costing me $307 because it is actually using margin. But basically, if you weren't using margin, this would be $1,500 that you're putting up to agree to buy the shares. And I will be receiving $24 for the trade. So what I do is I do preview, it's ready to go, and we do submit. And then we'll see if it got filled. Yes, it got filled right there for 24 cents. So now we will monitor that trade, but let's go ahead and do one a little bit further out just so you can see the difference. Going back to the chain, I am going to select now, I'm looking at the mid-January, it's 1/17 date. Now, if we look at that 15 level, we could do this. It's a little bit further out, and a lot can happen between now and then. Now, this is a more aggressive delta, but I will get $86 for this trade because I'm going further out. Or I could go right down here to 14, which may be a little bit margin of safety for me. It's got a 0.2 delta. So this is actually a better risk reward because if I'm put the shares at 14, then I can enjoy my stock appreciation as it heads back up. So I think what I'm going to do is I'm going to select this one right here, the $14 with the 0.2 delta, and I do sell. And then I go ahead and send it to the ticket. I put in my quantity 1. I do preview, and here again, because I'm using margin, it's diluting how much of cash I'm actually having to put up, which that's a really good part about using margin, but I'll be receiving $50 for this trade. So I'll go ahead and press submit, and we will go see if that one got filled. Yes, we were filled at 50 cents. So these 2 trades are positive. This is a $75 that I'm receiving right here in profit, and if I'm put the shares, let me show you how we would handle that. Here you can see I own 600 shares of Sofi. They're currently trading. I got them at 8.23 and they're trading at 15.84. So even though Sofi's having a red day, I would rather wait until they're having a green day. But for the sake of making sure you know how to do this, I'm going to go ahead and show you how you would sell a call on this. Now, I do not like to go out further than a week. So let's go back to the option chain. We are going to select 12.20 because I don't like to go very far out in case it catches a good run. And there's, you see, that's the put we sold. Now we're going to move over to this side of the chain. This is my call side. So I could sell a call anywhere from where we are now all the way up because I'm in profit. But I want to get the most possible out of this trade. So I'm going to look right here at this 0.2 delta. That's just a really good spot. And it's paying 17 cents. So that's a decent trade. But look right here above it at 17. That's going to be a strong level of resistance. And I can get quite a bit more if I go with this one. So I think I will go with this one because it's still low at 0.28. And I will be able to receive $26 for the trade. So I sell this one because it's a covered call. I have the shares and I am agreeing to give up 100 shares at $17, which is fine because I paid a little bit over $8 for it. So right here, this is the call, sell to open, quantity 1. We've got a good bid-ask spread, so I'll preview this. And it's only showing me $26 because I actually have the shares. And I submit that. And yes, it has filled. So now I have 2 sold puts, and that's great because if my shares do get called away right here at 17, then look, I'll be potentially able to get my shares back at both $15 and then $14. And the worst case scenario, if I don't get my shares back and it keeps riding high, well, then I get to keep all that premium. So that's the benefit of being able to sell both puts and calls on the same stock. Okay, is everybody still with me so far? You're doing so good. This was all the action yesterday. So we looked at our levels of support. We went and we sold some puts. We sold a put that was 1 week out. We went lower, selling a put that was a month out. And because we had the shares, we went ahead and sold a covered call, agreeing to give away some of our shares if it hits our strike price. Now, let's go into the broker and let's go check and see how our trades are doing today. So if you remember first, we sold the December 20th Sofi put, and we received $24 for it at the time. Well, here we sit just 1 day later, and we are already making good money. So we received $24 in premium, 24 cents each. And as it sits today, if we were to buy it back, because Sofi is moving further away from the $15 strike, we would receive the $11.50 that we get to keep in our broker. Actually, when we sold this, we received 100% of this in the trade. And now if we were to buy it back, we would hold on to $11.50 and we'd be giving up the 13 cents to buy it back. But what I plan to do in this situation, I'm just going to let this expire worthless as we get closer to the end of the week next week and we are above $15, then this will whittle down to zero. Now, if we are on the close of business day, December 20th, if we are under $15 or $15 or under, then I will be put these shares at $15 strike price, which is fine because when we looked at our technicals, I could then allow it, just be patient and allow it to rise back up. Now, the problem would come in is if I would put the shares at $15 next week, and then Sofi tanks and does not recover anytime soon. Then I would be holding on to shares that I paid $15 a share for, but they're undervalued below that, and I would show a loss in my portfolio. But if I would just hold on to them until they turn green again, then I can start selling calls. But again, the risk in this trade is if Sofi does not recover to its strike price anytime soon and I input the shares. So let's look at the trade we made that's a little bit further out. We made the same trade, but we went down to the $14 strike and we made it in January. This gave us more premium when we went out to January. But we had a less risky trade because we went lower in strike price. And so let's see how we're performing. This is good. We received $50 for the trade. If we were to buy back this contract now to get out of it, it would only cost us $38 to get out of the trade. And so I plan to just let this one continue to have the premium erode, meaning I will keep more of the trade of the premium I received. And hopefully this expires worthless. Now remember, we did sell a covered call as well. So you see my shares right here of Sofi. There's 600 of these shares, and I paid $8.23 for them. Well, they're valued now today at $16.21, the current price. But I sold a $17 call. And what I did when I did this, I agreed to give up 100 of my shares at the $17 mark if on December the 20th, at close of day, Sofi is trading $17 or higher. So what you're looking at right here, when you see that this trade is in the negative, all that means is we are getting closer to my strike price of $17. We are getting closer to the call away. And had I waited to this moment in time to sell this particular call, then instead of receiving $26, I would have received $29 for the trade. And so that's what this means. It does show you negative, but I want you to fully understand it's not actually that you're losing money right now at this point in the game. It's just money left on the table. I hope that explains it all better to you, and you can start to formulate how these work together to continue to build your wealth and build your portfolio. I hope that was eye-opening for you and it kind of explained a little about how options work. Remember, next Tuesday, I'd love to personally meet several of you that are interested in learning more about this, and I will be happy to share all the secrets of the trade for you to get started in this incredible option journey. Remember, if you are with me trading with Ashley, there is no trader left behind. And I had promised you the Fix My Trade Sofi video. I think you're going to love it. You'll find that right here.